Alright guys, you're welcome to today's video, and today I'm going to be analyzing the chart of gold USD, how you can trade gold and make profit. And if that is what you love, subscribe to this channel, hit on the subscription button to subscribe so you don't miss any new update. And if you find this video useful, give it a thumb up, like this video and share this video with your friend. Alright, without no further ado, let's get right to today's video. Okay friends, you can see already I'm on the chart of gold. Okay, before you take any position, you need to understand what is going on in the market. You need to understand the trend of the market, and also very importantly, you need to follow the leading of the market, not you leading the market. Okay, because if you follow the leading of the market, you will make profit. But market if you are the one leading the market, you may end up losing your capital. So you need to know the trend of the market. And how do we do that? First of all, we have our 200 EMA here. You can see this line here. Okay, this is our 200 EMA, and our 200 EMA is below our current market. Okay, meaning that our current market is above our 200 EMA, and that simply means that the market is an uptrend market. Okay, I believe you understand that, right? And here, this is our pivot point. Okay, and our pivot point is around 1998. You can see here. Okay, and our pivot point is above our current market. Okay, now you can see that this market is kind of fluctuating around this area, and this is called a symmetrical triangle. Now let me explain what I mean by that. Let me draw a line, a trend line. Okay, this is a trend line. I draw my line from this very angle right here. Okay, and let me take another trend line again from this very angle, all right, to right here. So you can see that this market is currently within this trend level. It's currently fluctuating. Okay, when you see a market at this level, it means that there's going to be a possible breakout. Okay, whatever breakout is going to come, it could be on a bullish it could be on a bullish side, or it could be on a bearish side. Okay, that is the reason why I created this video, to guide you on where you should go. Okay, all right. Now looking at this market is within this box. Okay, now the next thing for you to do is for you to understand the resistance and the support level, because it's always good that you trade on the resistance and support level. Now on this market, the support level is around this area, which is 1988. Okay, let me draw a line to signify what I mean, to show you what I mean. Okay, the current and the best resistance level is around this area. Okay, the first resistance level is around this area. Let me change the color to red. Okay, okay, so the first resistance level is around this area. So if market is able to break out from this level, we should look for further downside of this. Okay, so we should look for further downside of around 1988. Okay, and if market is able to break this 1988, we should look for further downside of around 1983, which is the second support level. Let me draw a line to show you, which is this. Okay, this is the second support level. All right, and you need to understand that gold most of the time depend on fundamental analysis. Technical analysis does not have a strong hold on gold, so you always have to look for news. Okay, Like the reason why this market is fluctuating is because of this news. Okay, gold post for second weekly gain as Fed post hope hot dollar. That is the reason you can see why this why market is kind of fluctuating around this area. So if there's any news that will come up, then there will be a breakout. Okay, the breakout could be on bullish or on a bearish side. Okay, so these are the two resistance, the two support level for now. The first support level is around 1988, and the second support level is around 1983. Okay, and it's always advisable to trade around this support level. Okay, now the second, help me chase that foul, is disturbing. That chicken is disturbing. Okay, now the second, this is the first resistance level, and the first resistance level is around 1998. Okay, all right, and the second resistance level is around 2007. Okay, which is this. Now let me draw a line to show you. Let me draw a line to show you. Is around this area 2007. Okay, let me change it to another color. All right, so this is the second resistance level. Okay, the first resistance level is around 2003. Okay, let me draw a line also to show you that one too. The first resistance level is around 2003, which is this. Okay, now you need to understand this. Currently the market is fluctuating, so if there's any breakout from this market, if there's any breakout and you see that the market is able to break out to this very level 1988, then we should look for further downside to 1983. Okay, but if the breakout goes on a bullish side and is able to break this our pivot point, then we should look for further upside of 2003, which is the resistance level. Yeah, there could be a pullback or there could be a further upside. So if gold is able to break this level of 2003, then we should look for further upside of 2007. And 2007 is another resistance level. Then if gold is able to break 2007 and go further for 2010 and is able to break 2010 level, then we should look for further upside of 2050 and so on. Then we can now consider the market to be on a bullish momentum. Okay, but as for now, market is kind of fluctuating. You can see. Now let's use our 1 hour time frame. Let me show you what. Let's see what is going on here. For shorter time frame, you can see here market is currently fluctuating. You can see. So if there's any breakout and market is able to break out to this level, then we can count on the downside. Then these are the level we should trade on. Okay, the first support level is around 1988, which is this. Okay, and the second support level is around 1983. Okay, which is this. But if gold is able to break out of this angle now, then we should count. If gold is able to break out of this symmetrical triangle and is able to break out from this our pivot, then we should consider the market to be able to break out to this very resistance level. If we reach this resistance level and break out, then we should consider the market to get to this level 2007. And if it's able to also break out from this 2007, we should consider it to go towards 2010. And if it's able to break out from 2010, then we should consider the market to be a bullish market. Okay, a bullish momentum. Okay, then you can follow the market. Always advisable that you follow the trend of the market. Monitor your market and also do your risk management is important. Set your take profit and stop loss. Okay, it's important that you do your you set your take profit and stop loss. So that's all for now. If you find this video useful, please give it a thumb up like this video, and also please subscribe to this channel so you don't miss any new update, because we'll be updating you guys daily on gold analysis, and you can make money trading gold. Okay, and I love you guys. Thank you so much for watching, and God bless you. See you in some other video. Love you.